Hi and welcome back to Cheeky Crypto. My name is Nick, and today guys we're going to be jumping down into the world of Bitcoin, taking a look at what's been going on most recently and giving you my thoughts and opinions on where I think Bitcoin is heading. As I get into the video, if you find it useful and informative, smash that like button. I really do appreciate that. If you are new to the channel, then why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so you will be kept up to date with everything that we do here at Cheeky Crypto. And if you haven't yet joined us in Discord, guys, what you're waiting for, check it out. Link is in the description below. Let's jump right down into this video then. So Bitcoin paired up with USDT. We're using the BitGet spot exchange, and this is the 1 hour time frame. Following on from yesterday's video, we're talking about a move upwards. This move to the upside was under a three-wave pattern. The three-wave pattern from the low end here up to our bounce, slight pullback to the 200 EMA, and then we're looking to move on up. Our targeted range for this was 31,413 to 31,713, this little yellow box area just here. We can see that the price had moved up towards our high of 31,376. So we're just ever so slightly off our target range. Now, it's possible that the C wave has finished right there. At the same time, however, it's still possible that we actually are going to be pushing up into this range one more time, and we kind of grab this last little bit. We'll be looking essentially for a double top with our high that was over here on the 23rd of June at 1700 hours UTC +1. So all in all, we can kind of see that we're kind of accurately kind of predicting the direction of the market yesterday, and we're looking at basically just kind of pushing up one more time, in my opinion, to grab this last little bit. Okay, now what I want to do is I just want to reflect on where we are currently. So we can see just down in here, we've kind of got ourselves our minimum expectations met with the C-wave structure on a three-wave pullback. This is perfectly natural, nothing unusual about it. We can probably go down a fraction more towards 30,850 to about 30,745, something to that effect, right? Maybe even a little bit deeper than that, because I've not accurately just pulled this onto the wick. So more, 850 down to maybe 740 in that little range. And you'll notice that this particular area right here would actually be the fair value gap, and the fair value gap that was created at the price point between 30,755 and 30,832. So it makes us a nice little range here to kind of be thinking about. Let me go ahead and just remove that and draw on the three wave structure. A, B, and C. Kind of once we do this move and we complete it, that's really where I think we then have a shot at moving back up into our actual target range on our C wave structure on the higher side. A little bit complex maybe for many people who are not familiar with the structures and how to read the market structure and kind of predicting people's behavior using Elliott wave theory, but essentially in a nutshell, we're looking for a small pull to the downside followed by a bigger move to the upside. Again, our minimum expectations on our move to the downside have already been met, which means there's no guarantee that we go down to fill this fair value gap, and we could of course just move up towards our actual target range. Likewise, that target range doesn't have to come on in. I suspect that it will though, because the probability of continuing to move down without some kind of move upwards is low. So I think for the most part we have to kind of come down, hit the fair value gap, and then move up to our targeted range. Okay, that's kind of where I think that is likely to go. So at this point, let's actually jump on over into the new membership website that we launched on Saturday. This membership website, if you are looking to become a member, gives you access to so many different things, whether that's exclusive video content, course material where you can learn Elliott wave theory, smart money concepts, how to build a portfolio, and so forth, as you can kind of see in here, and risk management, all the way through to exclusive data such as the Bitcoin data, Ethereum, XRP, Cardano, and so forth, right? And I think we're just going to go over into the Bitcoin data, because what I want to do is I want to see what's going on with some of the things and some of the metrics. Okay, but again, this is at your fingertips. You can obviously go through all of this at your leisure if you are a member with the data perk. I'm going to make this a little bit bigger so you guys can see it a little bit clearer for the video purposes. And there's 4 tabs. We've got the overview. I'm not interested in that today. I'm not really overly interested in the exchange data at the moment, but we'll take a look at it nonetheless. And we can see that over the last 30 days, we've seen 226,000 Bitcoin leaving the exchanges. So it's pretty important, but we did obviously see a few changes in the source data as well, but we won't go into that today. Liquidations are on the smaller side of things, only $20 million of liquidations on BTC, Binance being the largest exchange of liquidations on Bitcoin, coming in at 6.34 million. Ultimately, 72% of short positions were liquidated as we pushed up yesterday, and 27.7% were long positions. Again, everything is ranked there, but I want to take a look at the wallet count data because it's the wallet count data that I'm interested in today. I want to see, what's been going on with the bigger picture, right? So when we start thinking about whether we are in a bullish market or a bearish market, we need to see whether or not large institutional level players are holding Bitcoin, or whether they are accumulating Bitcoin, or even potentially dumping Bitcoin, right? These are important things. So again, this is everyone's fingertips. If you're a member with Data Perk, you can go in here, you can adjust things. For example, I can take this slider and I can bring our data all the way down to, let's say, 2021. That's going to adjust our view here a little bit so we can see, what's been going on over the last couple of years. And well, it's not looking positive, right? We saw up in February 2021 that wallets were over 2,490. They came down quite aggressively in early 2022, down to 2,122. They bounced up a little bit towards the 2,200, almost 2,300, 2,298 wallets, and then aggressively has come down ever since, right? And you can see that when we had the bottom for Bitcoin back in November, there were 2,111 wallets. Right now we sit lower than that, right? We sit here at 2,039 wallets, okay? So although our lows were down here at 2008 wallet counts for those who have over 1,000 BTC in their wallets, and they have been moving up a little bit here, it's nothing terribly too impressive, nothing even to what we saw in the previous kind of moves to the upside, and therefore I'm not confident in thinking that these guys are really back in the price action of BTC. This becomes more apparent when we take a look at the larger size wallet, which has 10,000 Bitcoin or more. Currently set on 108 wallets. You can see how the price has been moving up in 2023, and these guys have been selling into that move to the upside. Essentially, they've been using that pump as exit liquidity. Then, of course, they did start to move up a little bit here, but they've come right the way back down again. Now, you can see they moved down, they bounced up a little bit, and then they moved down again. Now, this particular size wallet is something that I think works alongside that of the 1,000 BTC wallet. I like to think of maybe a 1,000 BTC wallet being an institutional level hot wallet, with a 10,000 or more BTC wallet being more of a cold storage. I don't really have any evidence of this. All this is simply the facts of the number of wallets that have X amount of Bitcoin and how they are moving. How we interpret this data is entirely up to us, right? And it's important that we kind of reflect on that to a degree. For me, I think this is quite telling because we saw what happened back in 2017. If I grab this bar and just move this over, actually it's 2000 and I think it's Q4 where we saw this aggressive move to the downside over here. That's it. Where we see this move from the highs of 124 wallets down to the lows of 97 wallets. And this is what brought in the actual bear market low. Let me actually go ahead and just bring this over into our kind of, yeah, let's do this. As you can kind of see here, how this kind of played out as we moved down towards those lows. Let me actually expand this out just a little because I think I did that too far. There we go. So as you can kind of see, we had that aggressive movement. We brought in the bear market low in December of 2018, and it was basically the 10,000 BTC wallets that kind of pushed the price down there. If you take a look at it from the 1,000 point of view, you can see that they were aggressively buying as that moved to the downside. So you can argue there was transfers between the 10,000 BTC wallets and the 1,000 BTC wallets. But at the same time as this was happening, we also saw some selling pressure from the lower side of things. You can see that we had 730,000 wallets that had 1 BTC in them, and that came down to basically 695,000. So we lost about 35,000 wallets that had 1 BTC in them. Nothing major, but it was an indication that there was selling pressure occurring at this level. And again, this is also apparent on some of the smaller levels as well, like 10 BTC, and you can kind of see aggressively coming down. They just spike up in places, of course, but what we're looking for here is a transfer. If we want to see large institutional players coming in, like the whales at the 1,000 BTC or more, then we need to see people selling their Bitcoin to them. And this was occurring before the bear market bottom actually landed, right? They were accumulating before the bottom. They were buying into the move to the downside. And it's important that we understand that, right? Large players will be selling into the pumps, and then they'll be buying into the dumps. And so I talk about this because it's important that we reflect on where we are right now, right? If I bring up our 1,000 BTC wallet and just shoot this back down to, let's say, 2022 to 2023, you can see that they've just been aggressively coming out of their positions. In fact, over the last 365 days, you can see that wallets with 1,000 BTC or more are down 7.53%. So very significant. And we can see also over the last 180 days, there's barely any movement at 0.05, 90 days at 0.74, and 30 days at 0.44. Last 7 days is only 0.34%, basically meaning that there isn't actually that much accumulation happening at these levels. In comparison, we can take a look at the 1 Bitcoiners, and you can see that they are up 14.81% in 365 days. This is an indication that larger investors are not participating, but smaller investors are participating, as in basically big investors are selling their Bitcoin and have been selling their Bitcoin to the retail investor. And usually and typically, if history does repeat itself, this does not end well for the retail investor. Okay, so I'd like to talk about this. This data, of course, is available on our website for all 𝗕𝗘𝗪𝗀 members. It can be a little bit complex to sign up, but I am working on making that a little bit easier over the next kind of coming few days or so. Basically, you need to get a minimum of a base package. There's lots of different options to this. You could have base on its own, you could have the base package plus the traders package, base package special alerts, or the base alerts trader, or even potentially all perks as well. And that's data, that's education, that's a Discord alerts, that's everything through in the trader side as well. So there's a lot of things up for offer. Why not check it out? This is linked in the description below if you're interested on getting your hands on that on-chain data. I'm adding more over the next few months to the on-chain data. Lots of different pieces of information will be added, everything from additional altcoins all the way through to different analysis data points as well. So well worth checking it out if you haven't done so already. Moving down to the charts again, right, outside of the on-chain data, we do find ourselves in an interesting spot on BTC. Like I said, my expectation is that we are to be moving up more towards that $34,000-$35,000 CME gap at this point. I do think that is something that we are likely to see. We can obviously go ahead and bring up the CME gap for those who haven't yet seen it, but you can see it's right up here at the 34,455 to 35,180. And obviously, I think after that we have a move down to the 20,330 to 21,110. And of course, the big scary one is there's a CME gap down here at 9,735 to 9,925. This was created over here in July of 2020. No guarantees that that happens though. Sometimes the gaps never get filled out. Sometimes we just think it is impossible to move down there, and then it goes ahead and does it anyway. Here's another clear example. We had a CME gap over here, and we filled it out a year later. So it happens over in December of 2020, and we filled it out in June 2022, so a year and a half. This one's obviously a lot longer. Is it possible that we come down and we grab this CME gap? Yeah, it's possible. Is it probable? I don't know. With everything going on with the ETFs, it becomes a little less likely to think of new lower lows. It becomes a little bit more of a bullish environment, at least for BTC. Many of the altcoins, though, I think still are projecting new lower lows and those things, and we should expect that to occur still. But for Bitcoin here, it's fair play. Like, you know, it was tracking some pretty bearish movements, and if Gary Gensler goes and we get a more favorable SEC chair that may approve BlackRock's ETF, I think we're going to be in a very strong position on BTC. But let me know what your thoughts are in the comments down below. As I kind of end this video, if you found it useful, smash the like button. If you're new, subscribe. And if you're looking at some interesting perks and benefits of becoming a member, why not check out the links in the description below for membership at 𝗕𝗘𝗪crypto.io. Until the next one though, guys, have a fantastic day.
We are not financial advisors, and none of what we have communicated verbally or in writing here should be considered as financial advice. It is not. Do your own research before investing in any digital asset or affiliate offers, and understand that investing in any crypto is risky. If you do, you need to be prepared to lose your entire investment. This video is for information and entertainment purposes only. All our videos are strictly personal opinions. Please make sure you do your own research and never take our opinions for financial guidance. There are multiple strategies, and not all strategies fit all people. Our videos are not financial advice.